Hi everyone, welcome back to my channel. Welcome back to another market analysis for tomorrow. I'm glad I'm doing this after the longest time. I was traveling a bit and then there was Eid in between, so I got caught up with all of that. But I'm delighted I'm back here with another analysis, and let's see how markets could play out tomorrow. As always, let's begin with US futures. Let's begin with Dow futures. So as we had discussed the last time, we are seeing a proper inverted head and shoulder breakout over here. If you notice, this pattern looks something like this, and in a good way we have broken out, retested and started the upwards trajectory. But right now we are facing some resistance from this very important zone from which the market could never surpass. We've never seen a daily closing above it since the 5th of December. It's half a year and we've never seen a closing, so we are again facing some resistance here. And considering tomorrow could be a holiday in the US market, so maybe there wouldn't be a lot of volume today. So whatever action we are supposed to see, probably we'll be seeing on Wednesday. As far as dollar is concerned, dollar looks like it's doing fine. If you see from the fall, from the recent swing high, if you one second guys, from the recent swing highs, if you notice, the market's 0.61 retracement levels also align with the 200 DMA. So once dollar starts closing above 103.6 levels, that's when we could see some panic or sell-off in global equity markets, including ours. So until that happens, I think we are good to go. And if at all this trend line and the support of 102 is breached, then we have a strong up move, a strong rally pending. So keep a watch out for dollar, because this could guide you towards the direction, upcoming direction of the markets. Now jumping back to our markets, the mother market Nifty. Let's begin with, since we haven't had a weekly analysis video, let's just quickly look at the weekly chart as well. On a weekly chart, Nifty looks rather super strong, with the previous week's candle being almost a 3% candle. So if this week, even if we happen to see a doji or a little bit of retracement, that is not negative in nature at all. And in fact, for the broader picture, right, for everyone who's positionally long in the markets, as far as the markets are trading above 18,750 to 19,000, right? To be honest, as far as markets are trading above 19,000, the markets are still bullish. They could probably consolidate time-wise or side-wise. So expecting another same big bullish candle, it is probable, it could happen, but the probability is slightly lesser than a consolidating week right now. So don't plan really aggressive trades. And to break it down to a daily time frame, Nifty was trading between this parallel channel that you see that's marked clearly. And now something that you could learn from here is, this is very important, right? You see this whole setup, right? This whole setup actually broke the channel, and a lot of retailers must have gone short here. And the jump you see, right? The jump you see after that, that's a very strong short squeeze. So a lot of retailers, HNIs, FIs, I don't know who was there, but a lot of people were caught up here in this trap. And as soon as they started building shorts, considering this parallel channel was broken, now you see a short squeeze and the market's going vertically upwards. So that happens, and I really hope whoever's watching this, you were not caught in that trap. So right now on daily, what I think is, if you notice from around, when is this, around the 27th of June, we have straight moved up almost 3.5%. So a vertical journey of 3.5% has to come with one retracement, a healthy retracement, in order for it to travel higher up, because there's no way that the markets could just from this zone just keep going higher, right? That's not possible, because if that happens, the crumble, the breakdown would be so strong that anyone who's long would be regretting being long in the markets. So if at all you want to play a bigger rally, I would recommend that you wait for a retracement, for a pullback, because this is not the ideal place to build fresh longs positionally or intraday. So what I'm expecting is, considering the breakout of this channel, the markets could actually come down, fill the gap, retest the zone, and then start moving up, right? So if you see a pattern like this could be one place where you could be going long. Or if you see a bullish hammer or an engulfing candle retesting this parallel channel, that could be another great long entry. So wait for the market to give you a setup before you build fresh longs. Right now is not an ideal place to build fresh longs. Now coming back to intraday time frames, how we could plan this trade for tomorrow, right? I have a pretty simple setup for tomorrow. However, I would recommend that since US markets are also closed tomorrow, I don't think there would be a lot of volume in the markets. And we might not even see a big gap up or a gap down, considering there won't be a lot of volume trading in the US markets. So In any case, the three scenarios that we have for tomorrow, right? Today the market, yes, even though we open gap up, continue to move higher, we are basically trading in a range right now, and the range is from 19,336 340. Let's consider 19,340 to 19,250. It's a 90-point range. And in any case, we open flat tomorrow, right? The three scenarios could be flat, gap up, or gap down. In case of a flat opening between 250 and 330 340, I would not recommend any long trades. However, if you do happen to see a flat opening or a slightly gap down negative biased opening, and you see a bullish candle here, right, around this trend line or along this support zone, if you see a hammer or a strong engulfing bullish candle, yes, above the high of that candle you could build some longs, and you could again play out the range. Maybe the markets could come down and continue this range for another 1-2 days before you see a breakout or a breakdown at expiry, because relatively we've moved way vertically higher, and a journey like this could only be significant and bullish in nature if you see a little bit of a retracement or a pullback, right? So let's try to wait for that pullback to build fresh longs. And in any case, you're holding longs today. If at all the market opens gap down or slightly flat, and you see a 50-minute candle closing below 19,250, I would want you to book your longs momentarily, because then we would definitely be filling this gap. We will be retesting 19,200, and below which, if at all you see the market sustaining below this trend line and below 19,200, then we could again go all the way down to retest this breakout of the channel, which is around 19,055. So we have trades with levels on the downside, because on the upside we are trading in a all-time high territory and we really can't mark levels. So if at all you are planning to trade longs, with your stop loss being today's high, right? If at all the markets open slightly gap up or open flat and see a 15-minute candle closing above 19,330, then with 19,330 as your stop loss, you could try to trail your longs and probably play out until 19,400, 19,500 levels. And in any case, we open strongly gap down, right? If we open gap down directly below 19,250 and we breach this 19,250 zone in that manner, then you could initiate a quick fresh short position, which will give you your first target of allow me to mark this. Your first target in that sense would be this gap fill, which is around 19,180, and if at all that is also breached, then your next target could be 19,050. So there's a big target on the downside. On the upside, you could keep trailing if at all you're holding longs, because we really don't know where the markets are headed right now. So that would be Nifty. Now coming to Banknifty, again, if we are starting with a weekly analysis, in Banknifty you see a massive candle, right? And this is almost 2.5% candle. So right now, again, in Banknifty also I have a similar view. I'm not expecting a very strong bullish candle right now. I'm expecting probably a hanging man or a doji around these levels, a little bit of consolidation for another week until we see a new fresh breakout which we could participate in, right? So this is not the ideal place for building any fresh longs right now. We got to wait for a little bit of retracement so that we get a new chance to, you know, enter the longs. And if you break it down on a daily time frame, Banknifty looks rather strong. And again, just like Nifty, Banknifty since the 27th of June has moved straight up almost 4%, right? So a little bit of healthy retracement for new fresh positions to be built in the market is very essential. It's very necessary. So it's very simple. On a daily time frame, if at all you're trading, it looks pretty simple right now. Consider the high and the low of this candle, and whichever side you see a daily closing, we are going to play that side with these levels being the stop loss for your trade, right? So now how that comes into perspective is if we break this down into a 15-minute time frame for intraday purposes tomorrow. So yeah, for intraday, our setup is pretty simple for tomorrow. In any case, we open flat, right? If we open flat anywhere between 45,100 and 45,000, let me mark this. Anywhere between 45,100 and 45,250. Let's, just be cautious. Let's just take this for precaution. Between 45,100 and 45,250, it's absolutely a non-trading zone for an option buyer. There are no calls or puts here because the volatility is mad. You see the wicks, you see the rejection wicks from the bottom and the top. As an option buyer, this will just decay. It will eat your premium. It will not be worth the risk reward. So even if you are planning to trade tomorrow, if you are planning to build a new intraday position, okay, let's consider case one. We discussed between 45,100 to 45,250 non-trading zone. Above 45,250, if we open or we see a 15-minute candle closing above this, that will also be breaching this downtrending trend line that you see right now. So above 45,250, we could build a fresh long position for a quick small target of 45,320. or for that matter, let's say 45,350. So you get a 100-point scalp here, above which we could keep trailing our stop losses for a psychological level of 45,500. Now, in any case, we open slightly negative, or we gap down directly below 45,100. Then in that case, we can get a quick trade with our first target below 45,100 being 44,984. Below which we could hold our shorts until 44,881, but I don't think the markets would stop here. Then I would actually try to hold on to my shorts until these closing levels, right? This gap needs to be filled before we start an upward trajectory. So below 44,980, if you see another 50-minute candle closing, then you could hold on all the way till 44,770, and that could be an amazing trade, right? And in any case, again, if 45,250 is breached or we open above it, then we could go till 45,350, above which we could keep trailing our longs. And before we end this, just let's have a look at the open interest as well. 1 second, guys. So yeah, when you look at the open interest of Nifty on a weekly for the current Thursday expiry, if you see 19,300, right, we are trading just at 19,300, but it has a massive put writing over here. And if you look at the PCR, it's extremely super bullish. It's rather scary to be 1.57, right? It is so bullish that a technical correction, a technical retracement is almost essential. So this is one of the reasons why I'm not willing to carry any longs overnight, because in a bull market, in a strong bull market, the corrections are very fast and very furious. So I hope you don't get caught on that side. So wait for that retracement before you build fresh longs. And coming to Banknifty, the PCR is 1.46, again super bullish, rather unhealthy. A little bit of retracement will really help to build fresh longs. And for that matter, you see a lot of straddles open at 45,200 where we are trading right now. So probably tomorrow and day after could be sideways. So wait for a breakout or a breakdown or a confirmation daily candle before you initiate any overnight BTSC trades, or you want to hold a trade that could last for a week. Wait for a closing on a daily basis below 45,000 or above 45,400. So I guess, and one more thing that I thought I'll discuss with you is, if you look at today's advance decline ratio in Nifty 50, there are 23 advances and 27 declines, and declines outnumbering the advances. So this is not bearish in nature, but it's rather consolidating, it's rather sideways. I could not tell that markets are directly like extremely bullish right now and are gonna continue moving in one direction. Today also, if you notice, right, this is one more thing I have to share with you guys. If you notice today, most of the rally that has come in today's market is from Reliance. Reliance has been super strong. Reliance and HDFC Twins. Around half of the rally that Nifty has shown today has been comprised because of Reliance and HDFC Twins. And again, Reliance on a daily time frame is very interesting right now, because Reliance is approaching the upper end of the parallel channel that it's been trading for the longest time. So again, until you see a daily closing above 2670 zones, it would not be ideal to build fresh longs. Even though this candle would make you want to jump into the market, would make you want to build fresh longs, it looks super strong, but we have approached the upper end of the channel, and probably you could also see a little bit of retracement from here. It could probably come back all the way down or retrace a bit, consolidate a bit before you see a breakout. So wait for the breakout and a closing, daily closing above 2670 levels. And the next stock that was moving the market today in HDFC Twins, let's look at HDFC Bank. They move almost the same. So even HDFC Bank, right, on a daily has failed to close above the strongest resistance the markets have always faced. If you look at these zones, right, yeah, these zones, the markets have never given a daily closing above this. We've always touched this, and even today we moved almost 2% above this, and then you saw a strong sell-off from there, right? So until you see a daily closing in HDFC above 1730, for that matter, to be conservative, until you see a daily closing above 1730, I would not recommend building any fresh longs. Wait for a little consolidation and a daily closing, only then we build fresh longs. So I guess, yeah, that is all from my analysis, and I hope these levels help you out tomorrow. And I will do my best to be more regular and consistent with this, and I hope these levels help you out. So kindly do like, share and subscribe to my channel, and also follow me on Instagram. I will leave my link in the description box. And also for any of your friends or family who will be requiring an analysis to trade the markets, kindly do share this with them. I wish you guys all the best for tomorrow, and I will be trading tomorrow, and I'll be sharing my PNL on Instagram. So all the best. Hope this analysis helps all of us, and we have a profitable day tomorrow. I'll see you guys, folks.